It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, August 3rd, 2016. Crude oil and the S&P are both bullish, while gold and euro are bearish going into Thursday's trading session. I have another great newsletter for you tonight, guys and gals. Plenty of reliable trading opportunities setting up for tomorrow. But before we jump into our charts and put the strategy for together, I want to remind you the only place to find this full-length version of the newsletter video is on our trading blog at sidewaysmarkets.com. If you're watching this video right now on our YouTube channel, this is only a small portion of the entire newsletter video. There's a link in the description of the YouTube video. Follow that link and come over here and join me on the blog at sidewaysmarkets.com. Also, a couple things before I forget. While you're here on the blog, don't forget, if you want a free pass, come out and join me in the trade room. If you're not a member here at School of Trade, I'd love to give you an opportunity to come in and see what all the commotion's about. Grab your free pass in the upper left-hand corner if you're not a student. Below the video, lower left-hand corner, don't forget to join the mailing list. I'll send you an email every evening when our nightly newsletter is ready to be watched. Also, you can download all the charts that you see me using in tonight's video. There's a link right below the video there on the blog. And as I always remind you, you're going to learn more with me in 1 week than you will anywhere else on the interwebs. Take my free trial on the right-hand side of the website and learn all about how we trade, why we trade, when we trade, what we trade. You'll learn it all there on the free trial membership. And if you have any questions along the way, don't forget, I'm always standing by here to help you guys out. No question too big or too small. Hit me up on the live support button on the right-hand side of the website. We are having a fantastic week, a very, very good Wednesday today with all of our students in the chat room and the trade room. Hope you guys are learning and earning right along with us here this week as well. We got another big newsletter in store for us tonight, though. Let's quick start off by taking a look at the calendar for tomorrow. Tomorrow's Thursday, August the 4th. We do have some minor news. I call it minor. I don't expect it to be that big of a market mover. We do have some major news, some retail sales out of Australia. I do not expect that to be much of a market mover, though, in the Asian session overnight. We then go into some relatively big news coming out of the London session tomorrow. We get the Bank of England announcement and meeting minutes. You know, ever since Brexit, everything coming out regarding the Bank of England right now is definitely going to be a potential market mover. So look out for that tomorrow morning at the tail end of the London session and just a few minutes before the U.S. session opens up. And then, of course, we're going to the U.S. session. We get jobless claims tomorrow at 8:30 a.m. and factory orders at 10 a.m. According to this calendar, the headline news is jobless claims, although we don't typically see much reaction to the jobless claims report. Most important thing is going to be Friday, of course, because Friday is going to be that non-farm payroll number at 8:30 a.m. Eastern time. So really, if I had to guess tomorrow, I would say probably the most important news tomorrow morning is going to be that 7 a.m. report from the Bank of England. I don't expect much out of the jobless claims report. Hopefully I'm wrong, but it's been almost a decade now since we've really seen the needle move very much on jobless claims. You know why. Go to Google and you can figure that one out. And then, of course, factory orders at 10 a.m. I would expect those two to be the kind of the relatively strong news events tomorrow. BOE announcement at 7 a.m., jobless claims at 8:30, 10 o'clock factory orders. You know the schedule for tomorrow. And as always, don't forget, we'll be in our chat room tomorrow morning for the London session. We'll be in the trade room tomorrow morning for the U.S. session. Look forward to seeing you guys there live in real time. Let's get moving here. We'll go crude, S&P, gold, and then, of course, we can't forget about the euro. Crude oil is bullish and trying to complete the double up target after today's inventory report. The bull wedge tells us the buyers will be looking for opportunities at support levels on the way up to the target at $42 a barrel. The trading range tells us the buyers will be looking for either a breakout pullback at the highs or a trap at the lows of the range. And those double up targets, we got two of them this evening, will be waiting for the buyers overhead as very easy profit targets for the bulls. Sellers need to be patient right now, waiting for a successful breakout pullback below 40.44. That reversal line there at 40.44 is pretty much where the sellers will have some open space there, and then again below the battle zone at 40 tomorrow. Really, there are three main components to this right now. The first one, obviously, is going to be that wedge. The wedge target, we've seen a few of these this week. Whenever you see wedges on the chart, you really know three main things. First of all, the market is going to keep hunting for the wedge target. The wedge target is where those trend lines come together. The second thing is buyers want to focus on buying the low of the wedge, right? Don't buy the high. It's very similar to a channel, right? Buy the low of a bull wedge, sell the high of a bear wedge. The third piece, which is oftentimes the most kind of powerful opportunity, is going to be with traps. And traps occur below prior swings, below prior swings, below prior swings. So whenever we see a bull wedge, we know to look for, and this is very similar to a channel as well, we look for that move back below a prior swing. Buyers will enter the market trying to buy low to get that price, right, to jump back higher. So again, wedge target up at around 42, 42.04. We know to buy the low of the bull wedge, and we know really the most explosive moves are going to come after a trap low, after a move down to a prior swing low, right, as the buyers try to get in at a much cheaper price. I think the second piece of this puzzle, though, may just be the most actionable information, at least in the short term, and that is that trading range. Now, this is a great example of a trading range with a bull bias. And so what you want to remember about a trading range is that, first of all, if there is a bias, trade the direction of the bias. In this case, it's a bull bias going to the trading range. You can see a beautiful example of a trap low. So buyers want to buy the low of that trading range. What I always recommend to do is look for those moves lower, seller failure, and buy the low that way. Now, we also know, though, that with a breakout, we can look for a breakout pullback. So again, stay focused on the direction of the directional bias, right? Stay focused on the bull side right now because of that bullish bias going into it. If possible, buy the low of a trading range. That will always be the most reliable way to do it. And then the third piece of the puzzle for a bullish trading range is the breakout pullback. Now the breakout pullback is going to happen with a breakout pullback, right, to the high of that range. But that's not usually going to be the most reliable way to trade a trading range. Again, first of all, let's take a look at this real quickly here. Got a bull trading range. Again, we want to buy the low, right? That's the key. I definitely want to be looking to buy that low, and I always look to buy the low with failures, right? Seller failures. In other words, as the price tries to go down, the sellers try to sell it, and I'm looking to buy right into their failure. Buy low with failures. Failures are always our focus when it comes to a trading range. Now, what about going higher? You know, a lot of times traders will try to buy that breakout pullback, and sometimes it will work, but it's definitely not the most reliable thing in the world. And a lot of that has to do with the fact that buyers and sellers are always trying to fade the breakouts of a trading range. Breakouts of a trading range are not reliable. They're not reliable. That's why we look for failures, right, at the low of a trading range to buy it back up. So what ends up happening quite often is as the market tries to break higher, sellers are trying to sell back down. Well, their profit target is at the high of that range, and of course, they'll try to hold the position down to the low of that range. Well, what oftentimes happens is that when we see sellers fade the breakout of the high of that range, they take their profit at the high. That results in a little bounce, and a lot of buyers mistake that for being a bullish buy signal. So, of course, what happens? The buyers enter the market, price then collapses back down, stops out all the buyers, right, and then ends up going anyways. So I call this a breakout pullback. It's a little bit different than what a lot of other traders would consider a breakout pullback. You know, pardon the term, but you know, the old school breakout pullback, you know, markets are always adapting, markets are always evolving. Traders are smart these days, you know, so buying that first pullback, not going to be the most reliable thing in the world. What I like to do is I like to wait for those sellers to try to take this thing short, wait for them to get stopped out, and then buy into their stop, right? So basically looking for a chance to buy the break above that pullback swing. At that point now, it gets the sellers out of the way, and it allows those long-term buyers to make a new high. Right? A little bit of an okey doke, right? A little bit of a, you know, whoops, now you see me, now you don't, right? So buyers, breakout, pullback, not looking for the first one because a lot of times those will fail. And then I know at that point where the stops will be for those sellers, right? Because they'll take their stop from the high and they'll move it down to that swing. And that's where I want to get the most juice. That's where you'll get the best buying opportunity there. basically you're buying into the stops of those counter trend sellers, and at the same time, the buyers who got stopped out originally, they'll start chasing after that move and literally throw fuel on the fire going higher. Right, so that's a little bit of a breakdown there of how you want to look at that bull trading range. So we look back at the chart now. Breakout, strong breakout there, pullback, but again, this is the one where you get the measured move right in your way here. So just be aware of that first pullback. I would rather have a little bit of a trap, right, and then buy into that failure. All right, guys, third piece of this is I can't help but notice this area right here. Not only do we have a possible bull channel, those highs projected down, kind of a hidden channel low there. But this is what I would consider to be an untested reversal line. Okay, it's almost like a gap. There are going to be buyers waiting in this area right here, below the trading range, right, and above that 40.44, right, that 40.44 area. So as we go higher, again, buyers looking for that breakout pullback, kind of the okie doke, right? Breakout pullback, if you will, right? Buying into the seller's stop losses. As we go pull back to the low of that range, we go into this kind of buy zone I have here marked up between 40.66 and 40.44. That area, I would assume, this area at 40.44 will be a hotbed here for buyers long term, and that, of course, is what we're looking for. Seller failure to buy it right back up, because again, remember, you're at the low now of that bull trading range. So breakout pullback up to new highs, or what we'd much rather see is a pull back to 46 to 40.44, right? Get that seller failure as we try to make that move back up to those highs. In my opinion, though, really that's where, again, seller failure at the low of the range. As this price goes lower, seller failure inside the battle zone to buy it back up. And of course, targets will be waiting back at the high of day, up the double up for the news, the double up for the major range here today, and then possibly all the way up to that wedge target for tomorrow. It's a pretty hefty target, but it's only $1 and a few ticks away there, so it should be relatively easy if the bulls can keep control of this market. So buyers, breakout pullback. Buyers, seller failure below all the prior swings. What about the sellers right now? Sellers have a pretty difficult job. It's a bull market until proven otherwise, which means really right now the sellers need to get a lower low and hold a pullback on the way back down to that battle zone. Be careful, those sellers. Don't mess with that 40.20 to 39.96 area. Wait for it then to keep going. Right? And then if you can get and stay below the battle zone, you should have a pretty easy job there getting back down to that low a day. So right now, bears, got to be very, very careful right now. Be patient, right? Be patient if you're a bear, because as this price goes lower, we expect there to be buyers coming in looking to buy into that failure. Look to hold that pullback. If you can hold the pullback, should really get a pretty easy target down to the battle zone at 40.20, and then really make sure you get below that battle zone, hold it, and then for a move back down to retest this lows. This should be an interesting scenario tomorrow, because we have a very strong long-term bear trend over the past few months, and so we'll see what this thing wants to do tomorrow. I wouldn't be surprised at all to see this thing up to 42 by the middle of the morning tomorrow, or collapsing all the way back tomorrow. It's all going to depend on if we do break out, pull back, can we hold, or can we hold a pullback below and make a strong push lower? We'll be watching this live in real time tomorrow morning to see what we get on the chart. Next up here on the S&P. S&P is bullish and trying to finish rotation back to the highs of the channel tomorrow. The bull channel tells us to look for buying opportunities at the low of the channel, as well as prior support levels below the channel, with a target back to the high of the channel tomorrow. Right? We're looking for a channel rotation from the low up to the high. The bullish spiking channel has already tested the lows 3 times. That's the magic number for a spiking channel. So the most reliable buying opportunities will come after a correction back to the battle zone at 51.75. The measured move has been tested, which tells us